We're back with question time at Alhambra Investments, and this is the day of the week when we usually look at all the economic stuff that goes on. Guys, good to see you again. Um, Joe, this week Jerome Powell said that the Federal Reserve was not going to be in a rush to drop rates anymore. That wouldn't happen to have anything to do with this week's economic news, would it?
Well, I don't know if it's just this week, but yeah, the data was pretty firm this week. So I'll just go through this stuff. We did get CPI and PPI this week, the inflation numbers. They were as expected, but I think the news there, if there is any, is that basically the rate of change has stopped. It's not going down anymore. We're stuck in these mid twos on the CPI, and the core is actually a bit higher than that. So it seems like that inflation has stalled a little bit. It's not falling anymore, the inflation rate. So that's, kind of the news. And I think that, when you look at some of the other stuff for the week, at retail sales this morning, we're up 0.4. Although it was only up 0.1 x autos, but, autos count. So up zero point 0.4 is pretty good. I mean, look, retail sales have been lagging. If you think about, I think it's 2.8% year over year, but inflation is 2.6. So real retail sales not up all that much, but it does show that, it's a positive number. I think probably industrial production was out this week too. That was a minus zero point 0.3, but that was totally as expected. And industrial production has been kind of stuck at this level for quite a while. So I don't know if that's really news. I would say the most positive news of the week for the economy was the Empire State Manufacturing Survey. That's one of these regional Fed surveys. It's in the New York area. This thing has been negative for quite a while. It's popped into positive territory a little bit, but never for very long over the last couple of years. This is part of that whole manufacturing goods part of the economy slowdown. And we've been saying that we think it's going to pick up because of inventories getting kind of lean. And it looks like this month was the month. Uh, the Empire State Survey jumped to 31.2, which it was negative last month, like a -7, I think it was last month. And so jumped all the way to 31.2. And really the big news there is new orders. New orders were a -10 in the previous survey. Now it's a plus 28. So you got a 38-point swing in 1 month. And I got to tell you, I don't think I've ever seen a swing that rapid. And by the way, this is the survey. Most of the survey was done before the election, so I don't even think it's based on that. And frankly, new orders, I don't think new orders would be directly affected by the election anyway. So, yeah, look, I think there's good reason why Jerome Powell's saying, I don't know, we need to cut all that fast. The economy's pretty firm. Inflation seems to have stopped falling. So they probably do need to pause.
Well, at least the Fed is listening to the market for a change. Hey, Steve, pharma stocks. Man, there's been just a lot of stuff going on there. What did you see this week?
Yeah, that was actually what I was going to point out to me is kind of maybe one of the more interesting stories we've seen develop this week and actually earlier. If you look back, say 2 months, and I'm gonna use as a proxy the pharma ETF ticker PPH, that's down over 10%, while the S&P 500 is up about 5 over that 2 month period. And we talked a little bit about this. There's a narrative out there that Bobby Kennedy, his potential appointment, is driving some of this, and I think there could be some truth to that narrative, and it's kind of been interesting to see that divergence. I think it's one of the areas where the Trump election maybe is driving some market action in a way you can actually see in this divergence. That did kind of jump out at me, as well as also kind of the news with inflation Joe was pointing to, that despite the Fed cutting a half a point, then a quarter of a point, rates have been going up, and inflation doesn't seem interested in going below 2 or below that 2% target. That's something else we also talked about this week.
Joe, I know you don't like to speculate, but I'm going to ask you to speculate. Are between now and the inauguration, do you expect people in the market to just kind of pull back and wait to see what's going to happen, or is there going to be some action that goes on anyway?
Well, I don't, obviously, I don't know. I kind of think that's what will happen, though. But I just want to say this about what Steve said about RFK Jr. I don't know if he's going to get approved, but boy, that's going to be a fun hearing in the Senate. That's going to be really, really interesting to see how what questions get asked. Put it that way. It'll be must see TV. But and I don't know if he's going to get approved or not. I know he was appointed, or that's the guy that Trump named for HHS. We'll see. I think it is one of those things where people react to this stuff when they don't really know what's going to happen, and they're reacting kind of knee jerk, which is not a good thing to do. I mean, suppose, for instance, that it's not RFK Jr. What if it's some? What if he doesn't? What if he gets dropped out because they decide they can't get him approved through Congress or through the Senate? Then it's somebody else, and maybe they have a different view of these things. So I don't think you want to react too much to this stuff right now. I would actually say, Bob, that I don't think I have to tell you, I don't think as much of what's going on in the markets is about the election as people think it is. Interest rates were going up before the election, and they continue to go up, and that's because of the data. And the data hasn't changed because of the election, and I don't think it's really that changed all that much. And if you look at, for instance, this week, we had 10-year Treasury note yield this week is up 15 basis points. But so was the 10-year tip. So it's not even about inflation. That's an increase in real growth expectations. And I think that's reflective of what's been going on in the economy already. I'm not sure it's really about so much about the future. The data coming in is fairly strong. So, I don't know what we're going to get an update on Atlanta GDP now today. Before today, it was 2.5%, but I don't think there's anything in today's data that's going to make it worse. The 2-year was also up 16 basis points. And the dollar, I think, is the one area where I think there is action in markets that is directly related to the election. So the dollar is up almost 1.7% as we came on to do this for the week. And it is right at the top of that range we've been in for a very, very long time. We're right up close to 107. And I think that is a direct response to the expectation that there will be some tariffs in the Trump administration, because that is the natural response of currency markets. Is you mark up the currency where the tariffs are imposed, and the countries where it's being imposed upon, those currencies fall. But I think you got to be careful here not to read too much into this, because you just the market is what it is, and I don't think that anybody really knows what's going to come from the new Trump administration, with the exception of a few things like those tariffs. But even with the tariffs, by the way, we don't know what to expect as far as how it's going to be implemented, how big it's going to be. I know that Scott Bessent, the guy that's I think a lot of people are talking about for Treasury Secretary, him or Lutnick, and I gotta think it's probably going to be Bessent, but I don't really know. Again, he's a hedge fund guy. He's a trader, so he's a pretty smart guy. But he has talked about how that the tariffs should probably be phased in over time, things like that. But if you just think about it from a direct standpoint, if you raise tariffs 20%, well, you're going to see the dollar go up. If the dollar goes up 20%, what are the implications of that? That's a big, big move in the dollar. And I tell you, like I said, it's very close to breaking out and moving higher here. And if it breaks out and moves into a higher range, we're going to have to make some changes to our portfolio, which would primarily be in commodities and in foreign non-U.S. stocks. We're not there yet. We don't have a signal yet, but we're pretty close. And so we just follow the market and follow what the market's telling us, and and try not to overreact to things. And I think that's what everybody ought to do. Just take a deep breath, see what the market's telling you, and don't overreact too much.
Well, never a dull moment. You guys have a good weekend.